Hey guys, what is going on? Welcome back here at Young and Investing. For those who are new here, my name is Quentin, and in this video we are going to talk about perpetual futures trading. And no, I didn't change my mind on perpetual futures, as some people might have seen on my Twitter that I've talked about it several times, but I talked about it in a way that YouTube influencers, crypto YouTube influencers like myself, I count myself also as a YouTube influencer in crypto, but a lot of these are using their power to promote garbage platforms. And literally the platforms that they are promoting are like BitMEX, Bybit, Phoenix, and what else do I know? All these platforms are like trading against their own customers, and all these YouTube influencers fail to disclose the risks of this and fail to disclose with using only like low leverage, etc. They fail to do this. Why? Because they get like a percentage of all liquidations happening with their signups, and that is so very bad, because of course that needs to be compensated by the platform itself, and that is why these platforms are trading against their own customers. And I'm not just saying anything. This is based on truth. We know that platforms such as BitMEX, Bybit, Phoenix, etc. are trading against their own customers. And we can literally see that. I mean, like, the data is on the charts. Always. It's for every trading platform like this. So if we have a look to, for example, BitMEX, there is a perfect example of a typical BitMEX move that happened yesterday, and that is this right here. So you see that the Bitcoin price just went up in like 20 minutes. It went up like 3%, and then it fell with 5% or 4-5% to just continue its way up. I mean, these are literally like scam candles. I mean, this is just to liquidate as much people as possible. And if you have a look to where the wick of this move ended for on BitMEX, well, it ended here. It ended at 10,915. So the wick went to 10,915. If we, for example, have a look at Binance, which I would recommend as the trading platform for perpetual futures, well, on Binance, if we have a look to that, we can see that yesterday's move only ended at 10,000. Wait, let me get it here. Here it is, like 10,970. So the difference is 0.6% between the wick on Binance, which was not like a bigger wick than spot prices, and of course, like, for example, the spot price on Binance was the same on Coinbase, etc. So you can see that this is a legit move. But on BitMEX, these wicks always go higher and always go lower. Why? Because of course in this area they have like a lot more people like liquidated, and this area isn't like liquidated on other platforms such as, for example, Binance. If your liquidation price was in this area, then you were like, yeah, getting liquidated on BitMEX, and on Binance you would have been in profits because of course the move just continued. It's just that ridiculous, and that is why I hate people on Twitter and people on YouTube to promote these platforms, because they're literally just scamming their own customers, and you really don't want to give BitMEX more power than they already have. So yeah, I am doing this video to get like an other voice out there. If people want to trade perpetual futures, they will do it anyway. There are enough tutorials on YouTube, but I want to have like a different voice out there that warns for the risks and also give like the full disclaimer on all the risks. And I'm going to give you that right now. So first of all, 95% of the traders lose money. Only 5% is profitable, and especially with like leverage trading on perpetual futures, not a lot of people are profitable, and the few people that are profitable are literally taking it all from the non-profitable traders. So 95% of the traders lose money. Second thing is, if you want to trade perpetual futures anyway, you can do that on a cool platform, on a platform that is not trading against its own customers, like Binance. Please don't use too much leverage. Max 7x or 8x leverage is more than enough. Please don't use 20x, please don't use 50x, please don't use 100x, because it is available on all of these platforms, but don't do it. Please only go to 7x or 8x, because that way you get liquidated not that quickly. Also manage the rest of your risk. We will talk about it in just a minute. Please don't use too much of your portfolio. Just trade with a few percent of your portfolio if you want to do it anyway. Please don't go with 10% of your portfolio into one trade. Please don't go with even 5% of your portfolio into one trade. Use a few percentage points per trade, or if you're doing like several trades at the same time, this should be even lower. I'm personally trading with only a few percentage points of my portfolio, but I do one trade by one trade. And last thing I want to say is, please know how to trade. I mean, like, have a trading strategy, know how to do your TA, use your stop losses, etc. Then you might be like a little bit profitable with trading. I hope so for you. Personally, I only trade when literally the stars are aligning in front of me. I mean, I take a trade like maybe once a month max. One trade, that's it. Because I don't want to overtrade, because many people lose by just overtrading, doing too much trades of which they are totally not sure. Personally, I just do it when I see like everything falling into place. For example, I took a trade, as you can see right here on Binance, I took a trade BNB USDT. Why? Because first of all, everything was extremely bullish. Bitcoin was going sideways. It was alt season. BNB didn't pump yet. BNB was celebrating 3-year anniversary. BNB was at a historic support level, and BNB was also, or Binance is coming up with a new IEO in a few days, and that will also pump the price. So I took this trade really knowing what I was doing, and that is important. I'm not over trading at all. I'm very, very careful in how I trade. Anyway, if you want to trade, please use Binance or a platform that is not trading against its own customers. But personally, I don't know any except for Binance or, for example, OKEx, but I like to just use Binance. It's more liquid, it's more trusted. I trust this platform so much. So I use Binance, and there is a link in the description down below. Feel free to use it if you sign up with that link or open your futures account. That is, of course, the first thing you need to do, opening a futures account. If you do that with the link in the description down below, you get 10% of all your trading fees. So that is a little something I can give to you. So if you opened your futures account, of course, the first thing you need to do is fund it with some funds. And I'm going to show you how to do it. But for that, I'm going to turn off my camera and explain everything in the right bottom corner first. So how you do that is, well, you click on, you can buy crypto, you can deposit, or you can transfer. But the easiest way, of course, is to transfer. So your account is open, then you do like a transfer. And the only way you can do that is by transferring from your spot wallet to your perpetual wallet. Everything on the perpetual futures on Binance is traded in USDT, so you need to transfer USDT from spot to perpetual. I personally only have like 52 USDT in my spot wallet, but I can transfer it to my perpetual wallet. So confirm transfer, and then you see it is successful. So right now we have some money on our accounts. Then we also see here in the right bottom corner, I'm going to explain this first and turn my webcam on again afterwards. Then you see here margin ratio, and you see that I have one trade open right here. Here you see the symbol, so it's BNB USDT with 5x leverage. Then size, how much BNB it is, so 2,520. My entry price was 17.21. Mark price right now is 19.75. My liquidation price, very important, because at that price your entire collateral that you put in to have like a leverage trade will be gone. Everything will be gone on liquidation price. How is that calculated? Well, it is calculated in terms of how much leverage you use. For example, if you use like 100 leverage to go long or short, doesn't matter, then 1% is enough to liquidate your collateral position. For example, if you use 50x, 2% is enough in both directions, depends on which side of the trade you take, of course. So 20x is more or less 5%, 10x is 10%, and for example 5%, which I used, is more or less, it's always more or less like 20%. And that is how your liquidation price is calculated. Then your margin ratio is actually how much in your margin balance you have. So in your margin account, I currently have 15,000 USDT. You can see that right here. And you see that the maintenance margin, so the minimum amount that is required to keep my positions open, is 1,800 USDT more or less. So margin ratio is 11.92%, which is very good. You can see that it's in green. Always make sure you are in green here on this this thing right here. So you also have like yellow and you have like red, but for me 12%, it's very good. So for example, if my margin balance would go down towards the same number as my maintenance margin, then I get liquidated. So for example, if it's 1,789 here in margin balance, then I will get liquidated. So for now, that is very good. My margin ratio is only 12%. You see, the margin I took was almost $10,000, and P&L is like the unrealized profits or losses. And you can see that I am up 64% on my trade. And because I have like a $10,000 margin, you see that I have like $6,400 profits now. Then you see ADL. This is an indicator on how, when you will like be auto deleveraged, etc. Doesn't really matter. Just make sure that it's not like all the lights are off right here. And then you can see close all positions. And this is also very important because I have a position open right now. And if I want to close it, then I can simply click on limit or market. So you will market sell everything on that moment, or you can select the limit. For me personally, I think I have it still open right here, so I will cancel it. But you can do it. For example, I've already did my technical analysis and I want to close my position, my entire position, at 21.31 dollars for BNB price. So then I do type in 21.31, I click on limit, and then my entire position will be closed at 21.31. So now I explained everything here in the bottom right corner. I will put my webcam back on. Hey guys, I'm here, I'm still here. And here on the top, you can see like which pair you want. So there are a lot of pairs available on Binance futures, on the perpetual futures, but also like quarterly futures. This is a little different than perpetual futures because quarterly futures don't require any funding. You can see that perpetual futures do have funding every 8 hours. This is to keep like the price in balance with like the spot price and etc. It's a lot, but anyway, quarterly doesn't have this funding. Perpetual do have that, and quarterly is getting settled every quarter. So the person who has the future on that moment of settlement, then the thing will be settled. It's just that simple. Perpetual futures are never settled, but because of that, they have like a funding rate as well. Then here you can see like all available pairs for perpetual futures. You can also select like which one you want here on the top in your favorites. So for me, that is like Bitcoin, Ethereum, Link, XTZ, BNB, and Algo. So, but there's a lot more you can trade on. But for example, let's take BNB USDT because I already have a position open right here. So how did I determine when I want to close my position? Well, like I said, I want to close it at 21.30. Actually, that is just below this resistance level right here. So it didn't do it properly. Now it is there. So 21.50 more or less is like a resistance level. I want to sell a little bit below that. But of course, if you want to close your trade, you also want to open one. So I've already showed you how you can close it, the most convenient way to do so. Of course, you need to know your technical analysis to trade properly. But how to open a trade, you can do that right here. And you see like limit, market, and stop limit. So limit, and here you see also cross and 5x. Let's start with that. So cross, I would always recommend you to use isolated trading. I cannot change it right now because I am already in a position that is cross trading. For me, it doesn't matter because I have one position open. It doesn't matter if it's cross or isolated. The only time it matters is when you have several positions open, whether you want it like to be used as collateral for the other trade or not. So isolated is that every trade has its own liquidation price. This way you don't have the risk that your entire account will be wiped out. If you use cross with several trades, like I said, I've used it, but I have like one trade, it doesn't matter. But if you use cross with several trades, then if one of these liquidation prices will be hit, your entire account will be wiped out. So cross, it is handy to like lower or higher your liquidation price so that there is more like a margin between that. That is what it's used for, but it's not very risk management friendly. I mean, you should use like isolated, and then you have like every trade separately from each other. So always use isolated. I cannot change it right now, like I said. And then your leverage, like I said, you can go up to 50x, but that depends on the pair. For example, with Bitcoin USDT, you can go up to 125x, but like I said, just use a maximum of 7x or 8x leverage if you want to trade. That's already risky enough. Then we see like limit or market or stop limit, but limit, I would always recommend you to use a limit. You can see that in my wallet I have 5,070 USDT available, and you can, for example, make a trade. Let's say I want to buy the limit order, of course, then you can give like a custom price, but you can say like, okay, I want to buy at this point right here. So I want to buy if BNB goes back to $18. So then you can type in 18 USD. And then how much BNB you want to buy, and then you can also use this thing right here to like indicate how much of your account you want to put into this trade. So for example, 25%, and I want to enter at 18 USD. Then you see that the cost is 1,260 more or less USDT, and then you will receive a certain amount of BNB. So then you can enter the trade once the price will hit that, and you will be in the order books, because of course these are the order books. The sellers are here, the buyers are here, the most recent trades are here. So if you do like a limit order, you will appear in the books depending if you go long or short. Of course, going long, you bet on the price going up, then you will be between the buyers right here, or you can go short if you want to. If you think the price will go down, you can go short as well. But then you will be between the seller side, of course, but depends. So you can do it this way, or you just can type in manually how much BNB you want to buy at that price with your leverage, and then it says how much the cost is, etc. So this is how it works, how you can buy it. You can also buy it via a market order. I would not recommend to do that. You pay much more fees, but if you want to go straight into like a trade, you can do it. I mean, like, you're free to do so, of course, but you pay like higher fees, and also you will only get like you will fill other people's limit order. That's how it works. You are the taker and not the maker. You can do it, but a limit order is much more safe, and you can really say like, okay, you want to buy at this price. But of course you have the risk with limit order that this price will never be hit. Then a stop limit is actually to put like a stop loss on your trade. So let's say I have my trade open and I want to close it still in profits, because I entered my trade at 17.21. It's right now at 19.77 more or less. I can say like, okay, if the price goes down from here and it goes below this support level, which should be support, if it goes below that, I want my trade to be closed still in profits. So then we can say, for example, I want it to be closed when the price hits 17.60. So we can say like trigger price is 17.60. Then the price, this means like the price you want to sell your position in. The trigger price is only that you will at this price the trigger will go off, and your position will be sold at the price right here. So trigger price from 17.6 dollars onwards, it will get triggered, and the price we want to sell at is like 17.40. You can take the same as the trigger price, but it's not a very good idea. Why? Because here it will be triggered, and it is possible that your position will not get filled. So it's always better to take a little bit of margin between the trigger price and the price you want to sell at. So for example, 17.4, this should be enough enough margin between the two prices to be able to sell it successfully. Or you can simply say the amount of BNB you want to sell. And then of course, if you are in a long position, you of course click on sell or short. And if you're in a short position, then if you want to put your stop limit, then you can click on buy long. But then of course your price need to be higher than the trigger price, because you're doing the inverse move, of course. So that is basically how this platform works. And I wanted to make this tutorial to show you guys that you can trade responsibly as well. And if you want to trade, I would not recommend anyone to do it, except if you are experienced enough and have enough time to like do TA and follow it up, etc. Then you can do it if you want to. But I really wanted another voice to be out there warning people as well for the risks that are involved, because you can literally lose everything if you get liquidated one time. I mean, if you don't use your stop loss order, if you don't know what you're doing, I mean, then you get liquidated guaranteed and you will lose money. And of course, that's what a lot of these platforms want, like BitMEX, like Phoenix, etc. And also what these YouTubers that make these other tutorials and show these garbage platforms, let's say like BitMEX, Phoenix, Bybit, etc., that they promote that, of course, to fill their pockets, and they don't give any risk warning, etc. Most of them, of course. There are a few exceptions, obviously. But yeah, that is why I wanted to make this tutorial, not like to make you guys trade or promote this, not at all. I'm actually still against that people do this. But of course I do it myself, and I can show you how you can do it responsibly and make profits with it. Alright, so that is it for the video, guys. I hope you enjoyed it. If so, please give it a like, and if you're new to the channel, please subscribe by hitting that subscribe button down below to stay updated with all the latest cryptocurrency news, reviews, my own portfolio, and much more. I thank you for watching, and I see you next video. Cheers. Bye bye.